What's up everybody? It's your boy Grahamjay. I'm your mortgage point man and I'm bringing you mortgage solutions for all of your mortgage needs. So today we're going to talk about a very fun topic because this has brought in a lot of people a lot of pain near the end of their transactions, especially when they're just waiting to get their proceeds or waiting to get their funds or waiting to close or waiting for their sale to post, whatever the case may be. If you're using more than one bank account to close a transaction, there are some things you need to be aware of, especially when it comes to moving money. So I wrote an article about this on my website and you can view that at grahamjay.com and all of the other stuff we've posted there. But it goes into detail the problems you could see with this kind of a situation and how to overcome them or avoid them in the future. All right, so jumping into this, I wrote this article and I'm going to go through it pretty quick and then we'll talk about it. But basically, it starts like this. Sometimes we have more than one account we like to hold money in. That can be savings, retirement, 401k, checking account, etc. When you go to close your loan, the account you wish to use may have some documentation requirements from the lender. Here I'd like to go over some of those requirements and some challenges you might face near the end of your transaction. Remember, this is all written in experience. When a lender verifies the assets available for closing, they're typically going to document the available balance of each account, and this will include all posted transactions and deposits. If you have multiple accounts, they will do this on all of them. And if the lender asks for documentation for large deposits, you'll have to provide that too. This will happen prior to final loan approval. After that, you move to trying to close your loan with the funds that have been verified. So let's break it down. If you have more than one account, let's say one with $34,000 and another with $21,000, and your cash to close on your loan is $47,000, you will likely need to do one of the two things when you're trying to close. Option 1, you wire funds from each account separately. Option 2, you move money from one account to another and then send one wire. Now here are the documentation requirements. Scenario 1, you wire your funds from each account separately. You'll have to provide the lender with 2 wire receipts for the cash to close, and this may also come from the escrow agent. So either you send them the receipts or the escrow agent sends them the receipts. Scenario 2, where you moved money from one account to the other and then sent one wire, you'll need to provide a paper trail from each account and then the wire receipt for the final cash to close, which will often be provided by the escrow agent as well. Just know that if you move money around after final loan approval, the underwriter may ask to see the money movement prior to funding your loan, especially if the account you sent money from to close did not have the full amount available during final loan approval. This can cause delays when it comes to funding your loan and cause additional issues if you have new large deposits in that account. So my best word of advice, if you're using more than one account to close, move money prior to final loan approval to the account you wish to use or send 2 separate wires. Now obviously every situation is written in experience, and my experience with this, specifically this situation, is where I've had somebody with 2 separate accounts, they had them verified, and they sent one large sum from one account, but when the underwriter looked to fund the loan and there was a funding condition to verify the assets used to close, showed that the bank that was used did not have enough money at the time of approval, they then conditioned to get bank statements or transaction history from these 2 accounts to make sure that they moved the money from this account to that account and then sent the wire instead of receiving, say, a large deposit of cash and then funding the loan that way. Now, why this can cause so much frustration is because sometimes people do this in a single day. The transactions haven't posted, the wires are still pending, and it can kick the can down the road essentially for closing, and it's a real pain in the ass if you ask me. So not every lender is going to do this, but when it happens, you're going to be forced to show and provide more documentation. And let's say you even got a gift last minute from somebody that you didn't document with the lender. All this stuff is going to come up that you're going to have to address. So to save the headache, just make sure that you final approve the funds you want to use and send them through each account separately or move it into one account before final loan approval. Just save yourself the headache, trust me. The last thing you want to deal with is you're about to close, everybody's waiting for this wire and it just won't go through because there's a condition that needs to be satisfied and we need to prove that the funds came from you. So just take my advice on this one. Be mindful about where your money's coming from. Move it all before you close if you can, or just send 2 separate wires. I know it's an extra fee, but just get it done. The last thing you want to do is have to deal with a rate lock extension, an unhappy seller, an unhappy agent, whatever the case may be. Just get the money moved before final approval. And again, always reach out to me if you have any questions, and I'm looking forward to being your continued source for elevated and exceptional information and guidance.